Hi, I'm Peter Parker. Wanted to give you a quick update of 2017, looking backwards and looking ahead into 2018 for real estate here in the greater Sacramento area. Just a quick disclaimer, first of all, for your particular situation, I think that's going to be more interesting for you because we can talk about how's the market, but the real question is how's the market for you with what you either own and are thinking of selling or where you're thinking of buying and the price range, location, and so forth. And it varies tremendously. In the last couple of years, we've helped people with everything from a $13,000 manufactured home in a mobile home park to a custom home in Davis for over $1.3 million. And there's a huge variation as far as dynamics with price, supply, demand, and pace of the market. So if you have particular questions, please email, call, or text us. We'll be happy to address those. I think it'll be a lot more useful for you. Talking in general terms, in 2017, we saw another year of price increases. It's been a steady increase for about the past 5 years, and the pace has been pretty steady depending on price range, location, type of home. For higher priced homes, anywhere from 2 to 4% price appreciation. For less expensive homes, 8% on the low end, and sometimes 10 to 12% appreciation in value. There's 3 indicators we look at for that. One is just the actual price itself. Another measure you can look at is the price per square foot. And the third one is the median price. And those indicators basically show us that there's been more upwards price pressure in the lower price ranges, and the median price is trending upwards, more strongly than you'll see in the higher price segments. Another thing we look at is supply and demand. And supply has been really tight all over the Sacramento region, Placer, El Dorado, Yolo, Sacramento counties, all in the lower price ranges, with neighborhoods generally showing a month of inventory, maybe a month and a half to 2 months at most in the slower time of the year. In the faster time of the year, sometimes 2 weeks of inventory. And the reason I'm making those expressions with my face is anything under 6 months is considered a seller's market. Anything under 3 months is considered an extreme seller's market. So at best for buyers, we've had an extreme seller's market, and at worst for buyers, we've had just an off-the-chart extreme seller's market, which sellers tend to like a lot and tends to drive prices up. But we also want to pay attention to the pace of the market. How quickly are things selling? And that's another indicator of demand. We did see a slight slowing down in the pace of the market, but realistically it's between 2 and 4 days, depending on price segment, so pretty negligible. Given that, along with the 7 to 9% increase in rents in the Sacramento region, one of the highest increases in the nation, and the tight supply of rental properties, we're expecting to see continuing upward pressure on prices, continuing high demand relative to supply, and a fast moving market. And honestly, in the lower price ranges, especially below $350 and even up to as high as $500,000, it's not uncommon to see homes sell in a week or 10 days at most, sometimes in just a few days with multiple offers. So a lot of people, especially if they're buying, want to know, well, gee, where can I get a good deal? What about bank-owned homes, foreclosures, short sale homes? The reality is, with this 5-year uptick in values, there are not many people who are upside down who need to do a short sale or who get foreclosed. Most people for years now have been able to sell their homes at a profit. So region-wide, we had about 1.6% of sales being bank-owned homes and about 1% or less being short sales. So my message to people looking for those, what they think are going to be bargains, is they really like a needle in a haystack. Number 2, out of those bank-owned homes, the great majority of them have been owned by Fannie Mae, Freddie Mac, HUD, other government-sponsored entities. And generally, those tend to be actually priced higher than you'd expect. They're not bargains at all relative to the rest of the market. So what we're left with is a look ahead where we're seeing more of the same. The one big differentiator we see again is price. When you get up to $750,000 and above, it generally takes about double the time to sell, and once you get above $1 million, it takes longer still. Those homes can sit on the market for 3 to 4 months on average, still a fast-paced market. So for people that are thinking of buying and selling in the region in 2018, another thing we want to take into account is interest rates. and no one can predict the future with certainty. However, sentiment is very strong. One poll said a 79% chance by June, 89% chance by November, we're going to see a 0.5% increase in interest rates. And yes, a 0.5% is nothing to get hysterical about, nothing to alter your life plans, other than if you're one of the people that's thinking, well, gee, I'm going to wait until the fourth quarter of 2018 when demand softens and prices soften a little bit. Two things. Demand softens, the supply of homes shrinks, but in 2017 we really didn't see much of a contraction on prices, especially with such tight inventory. So you're probably not going to save as much money as you'd think, especially if all you're seeing is a 2% dip in prices after we've had January through October of it going up 6 or 8% before that. Number two is when the interest rate goes up a 0.5%, your buying power goes down 5%. So if, as a buyer, you take a 5% decrease in buying power, add to it a 5% increase in prices, by the fourth quarter of this year, you're probably going to be about 10% worse off than if you're able to buy sooner. We're going to see a little bit of a lag in the statistics, which can be misleading. Our market is strongly seasonal. Always is a big word, but we basically always see a strong upswing in inventory, a strong upswing in sales activity and prices, especially through the first 6 months of the year, but we don't get to see those statistics until a month or two later in the rearview mirror. So right now, everyone came out of the fourth quarter wondering, well, gee, we're seeing prices go down 1% or 2%, demand has slowed down a little bit. Are we hitting a plateau? Are we hitting that place where prices are going to level out and then start to recede? Are we risking being in a bubble? That's another huge topic on people's minds after seeing 5 years of the market going up, up, up. Realistically, the composition of our market is very different now than it was back when the last bubble happened in 05, 06. We don't have a bunch of people with loans that they never should have gotten in the first place because it had stated income. We don't have people sitting in negative amortization loans where they're making an artificially low payment while the debt on their home increases every month. We don't have a lot of people in adjustable rate mortgages that are at risk of having a significant uptick in 3, 5, or 7 years. Basically speaking, people who have their homes now, who are in the market, are in a much more stable place. So even if we see a decrease in market activity and a decrease in prices, we're probably not going to see the cataclysmic 30, 35, 50% drop the way we did 10, 12 years ago. Another thing to bear in mind as a buyer is if you think, well, gee, I'm going to wait and time that plateau, I'm going to time the market and buy when they start to go down. By that time, what you're risking is a decrease of inventory even more so, because when the market starts to go down, people who have homes that might have thought of selling them while the market's going up, they can make more money for it, are going to say, well, gee, why do I want to sell my home now? Prices are going down, and especially if they need to relocate and take on a new mortgage, whether they're downsizing or upsizing, if by then mortgages are 0.5%, 3%, 1% higher, it's going to get less attractive for those sellers to make that transition, and a lot of them may just choose to sit on their homes and they're going to be waiting out the market. So long story short, as I said at the beginning, contact me with any questions you have so we can take a real look at your specific personal circumstances, what you want. It's going to be a lot more meaningful. We can give you a lot more accurate data, and just stay with us. We'll give you these every month and especially every quarter as we go through to really track how things are progressing here in Sacramento.